real estate enthusiasts. Welcome to another enlightening episode of TNT Real Estate Gold. I am your host, Kenneth J., one half of the dynamic duo TNT Real Estate team, and we have for you today a very distinguished guest who's an expert in navigating the intricate world of mortgages. But before we dive in, make sure you hit that subscribe button so that you never miss an episode. Let's get it started. Our special guest today is no stranger to the mortgage landscape. With a wealth of experience as a loan officer, Lisa DePriest is here to share insights, tips, and demystify the world of home financing. But before I bring her on, I want you to learn a little more about her. So check this video out and we'll be right back.
With over 23 years of experience in the mortgage industry, Lisa DePriest has had the privilege of guiding individuals from all walks of life through the journey of homeownership. Whether clients have excellent credit or face challenges, her commitment as a mortgage loan advisor is to provide exceptional service, tailored advice, and reliable solutions. There's nothing more rewarding for her than assisting clients in achieving their dreams of owning a home. Lisa is dedicated to making this journey as smooth and fulfilling as possible.
Now, without further ado, let's welcome Lisa DePriest to the show. Give it up for her, ladies and gentlemen.
Kenneth, thank you so much for having me. And I love that intro. Look at all those pictures. No, it looks great. Thank you.
Lisa DePriest, we're thrilled to have you on the show. And to kick things off, let's start with a fun icebreaker. Now, if you could describe the mortgage process in 3 words, what would that be?
The 3 words I would say are simple, complicated, and misunderstood. And I would love to tell you why, if I can.
Yeah, sure. Please do.
I do feel it's always important to speak with your loan advisor. Everybody has a different story. And the more you share, the more smooth your process and your experience is going to be. So you often hear after some closings, oh, I had a great experience. My loan officer, my real estate agent, everything was great. They answered all my questions. And then sometimes you hear of people, oh, that was a nightmare. I'm so glad that was over. And that's where I think the industry is really misunderstood. It goes back to just having that conversation, letting them know what your goals are. What do you want to start a home? Are you going to be there forever? Do you plan on changing jobs soon? There's just so much that goes into it. It's really just having that conversation.
Definitely. Conversations spark everything. Now, with all that said, won't you share with our listeners one fun fact about yourself that they might not know?
A fun fact would be my family and I, we work with service dogs, and we have been working with service dogs probably the last 5 years. And 2 of our dogs that we have worked with have both been placed. One is in the IC unit for heart and lung transplants, and I hear he's doing very well. And the other dog that we worked with is a facility dog in a hospital. And I just know he's walking around those halls and bringing smiles to the patients and to those people in the waiting room. So I know they're doing their job.
Man, that is definitely awesome. So Lisa, the mortgage landscape is ever evolving, right?
Yes.
Now, can you share some insight into the current trends and changes you've observed in the mortgage industry?
Sure. Values right now are up, and inventory is remaining low. So what I've encountered over the last several weeks or even the last few months is people are finding these homes that they like, but they're waiting a couple of days to think about if this is the house they really want. And what ends up happening is the house goes under contract with somebody else. So I do encourage people out there that are currently looking, when they have their pre-qual letter, when they see something, I would go after it, put that offer in, because I am working with clients who are on their third and fourth contract because the house they did like is now under contract. Also, another thing that I've noticed is it used to be people were very rate conscious, but with the rates having them ticked up over the last year, year and a half, now people are okay with the rates and where they're at. They're looking at the payment more. And as long as they can afford that monthly payment, that's what's making them still move ahead. They're not looking at that rate. They know rates eventually will come down, and their goal at that time would be to refinance. And another trend that I would like to bring up is AI. And the reason why I feel this is important to bring up is not only is it important in our industry, it's important in a lot of other industries, and it is what's now, and it is what is the future. So I definitely would encourage people to learn more about the artificial intelligence and what it has to offer. In our industry, they're always looking to make things easier for the client. So, an example of that would be we can email disclosures when somebody is ready to start the process. And by doing that, it's either email. We also offer the mobile app to make it a lot easier, where you can just text someone and they can fill it out at their convenience via their phone. Another thing would be even signing it at the closing table. A lot of times we are able to send part of the closing package. It's called a hybrid closing. We're able to send part of that package before they actually get to the closing table to them via email, where they can sign some of the paperwork at their home before they actually get to the closing table. What this actually does is it makes their closing not as long as your typical hour closing.
Gotcha.
AI is here to stay.
I couldn't agree with you more. Every time technology makes a huge advancement, people are kind of scared of it. There are some people who are going to use it for nefarious things, as we know, but most of the people are just going to use it for things to help their business flourish and adapt to the new environment that we're going to be living in. So, like you mentioned too, email is kind of what really started the whole AI thing back in the 90s, right? I think late
Yeah.
80s, something like that. Can't remember. So yeah, it's just an ever evolving situation. So AI is here to stay, people. So let's do it. Let's keep it here and make the most of it. So Lisa, let's turn our attention to the loan process. We've talked about the AI and the way things are handled, but what can some of the viewers that are watching today, if they don't know anything about the home buying or home selling process, what are some of the steps that entails? You mind sharing a little bit with us?
Sure. First of all, there are many programs out there to suit each individual. So putting that aside, the loan process, when you're ready to buy that home, the first thing you want to do is speak with your real estate agent and speak with a loan advisor. The loan advisor is going to request you to fill out an application and ask for some documents so they can verify what you did put on your application, such as pay stubs, maybe a W-2. If you're self-employed, they're probably going to ask for tax returns. They have to verify everything that you just listed down on the application before you move forward, because they're giving you a pre-qual letter. You want to make sure what you can afford is accurate. Once you find your home, your real estate agent will then send me the contract. I'm going to fill in all the blanks on that application that you had just filled out. Once the application is now complete and we have your earnest money in there, maybe the seller is throwing in some seller contributions. We want it to reflect accurately on the loan application that's being sent to you. You receive it, You will then sign. These are all preliminary disclosures that come over to you. And then it comes back. Once it comes back to me, I make sure that I have everything from you. I might ask for more documents from you, maybe a driver's license. Um, Maybe there's some of the land you may own. I may ask for a mortgage statement. It all depends. Everybody has a different story. But I will then send the file off to my processor, who will then look at the file, and she will order your title, order your appraisal. A big thing to note, you will have two main additional costs that do come out of pocket and you want to be aware of. That is your appraisal, and it's most likely you're going to get an inspection on your home as well. So just realize you are going to need some funds to pay for those two reports that you need to get. So once the processor orders those, she gets the file ready. She may ask for additional documentation from you. She may ask for a letter of explanation if it's something she may not understand, but she will reach out to you. And then your file will go to an underwriter. The underwriter is really the third person that is looking at your file. They will then ask, they will actually send us a condition sheet with remaining items that they need in order to get you to that clear to close. So all of this does take time when it goes through each individual person. There's a bunch of files that they're working on. And so it is a process. It is maybe 20 days, 18 days, some 30 days. Some push their closings out to 45 days. Maybe they're trying to sell their home before they move into their new home. But this is basically the process that you would have to go through. And you look forward to those final words from an underwriter, clear to close.
Clear to close. Those are the words you want to hear at the end of the process. Definitely.
Exactly.
Thanks so much, Lisa, for sharing that. So, Lisa, let's talk a little bit about the pre-approval process and what people can expect in that process.
You definitely have to be pre-approved because your time is precious. The real estate agent that you're working with, everybody's time is valuable. Nobody wants to waste each other's time, but it's important to get pre-qualified because you have to know what you can afford. For instance, you may think you can afford one purchase price, but you may not be comfortable with that mortgage payment. So even though you may be qualified for a certain amount, it's the monthly mortgage payment that you're responsible for. You have to feel comfortable with that. And also, something else that's very important is when a loan advisor is pre-qualifying you. They're reviewing your pay stubs, your W-2s, they pulled in your credit, they see your liabilities, they see what you're responsible paying out each month. That's all taken into consideration. But they don't know about your child care that you're paying out monthly, or they don't know about any kind of extracurricular activities that you need money for, maybe for your kids or maybe for you. Only you know that. So you have to take those monthly costs into consideration yourself. We don't see that. We basically see what's on your credit bureau, which is going to consist of a car payment, maybe some credit cards, student loans, utilities are not on there. But you have to be very aware of that. So you have to be comfortable with what you are paying each month. That's why it's very, very, very important to get pre-qualified.
Awesome. Yeah. A lot of people have misconceptions going into it and not aware of these. I won't even say hidden costs because they're just costs that people are just unaware of. They think of the price of the home and the interest rate, and that's it. But there's escrow. There's like you mentioned as well, the appraisal and the inspection. So, and
Right. And there are plenty of times, plenty of contracts I've had. Even recently, I've had one woman, she's closing in a month, but this is her third home she had a contract on. And the other two, she had gotten inspections on. And the inspections are, they both came back bad. Now, she's not going to get that money back, but that is money that she put out there. She needed an inspection. I
Yeah.
highly recommend everybody get an inspection. Definitely highly recommend that. But she
Touche.
is on a yeah, and you don't get that money back.
Yeah.
So same thing with an appraisal, you're not going to get the money back, but that usually comes after your inspection when you know that you're going to move forward with the home.
Exactly.
Yeah.
Exactly. So thanks for sharing that insight. Now, I want to turn our attention to questions from some of our listeners now. Now, we've received a great one. We've received a great one on Instagram, and they ask, what's the most common misconception people have about getting a mortgage and how can it be addressed?
Okay. A big misconception is you need a lot of money to put down in order to get a home. And that is certainly not the case. You need funds, but you don't need 20% down to put on a home. That's
Mm,
your conventional loan. There are so many loan products out there right now. Whether it's conventional and you want to put 20% down, you can avoid mortgage insurance. You could put 10% down, you will have mortgage insurance. There are just so many programs. FHA is your typical 3.5% down. You have your programs, your down payment assistance, which are 100% loan programs. Now, just because a loan program says it's 100%, you have to also realize you will sometimes have funds that need to come to closing. The 100% that they're speaking of is taking care of your down payment. They're assisting you with your down payment. You still have to establish an escrow account, like you just mentioned earlier. You do have closing costs. A good way to get those closing costs down is to hopefully have that seller contribute funds
yes.
to your closing costs. That's the way to go. Is when you can really have that seller participate in contributing funds.
Awesome. Awesome. So, in a nutshell, listening world out there, these are some of the costs you need to be aware of: appraisal fee, inspection fee, escrow. In the escrow, there's home owner insurance. There's another cost that you have, and depending on what the home is valued at and where it is, that's gonna dictate what price you pay. So there's a lot of fees involved. But like Lisa mentioned, there are programs out there to help you get those things covered. And thanks so much for sharing that, Lisa. I really, really appreciate that. This is
You're
some very important information for the people out there today. Lisa, in your journey as a loan officer, you've likely encountered various scenarios now. Could you just share like a success story or a particularly rewarding moment that stands out to you?
Yes, actually, this question comes so easy to me because I do have a success story. This is a file that I had 15 years ago. I know it so well because I still keep in touch with this client. 15 years ago, she had two young kids. Both those children have come to me now for their first purchase on their homes. And the reason why this file is special is because I was told I wasn't going to be able to get it done. Basically, she called me. She was going through a divorce and they shared a lot of credit. He decided not to pay his share of the bills. Well, when you share credit, it's going to appear on your credit report. She couldn't make all the payments on the credit card debt. And she did work, she had a full time job, but these again were shared costs. They fell on her and it affected her credit score. So we needed to get her credit score up. I did tell her it was something that could be done. I definitely could help her, but it was going to take a long time. And it took about a year. And it took about a year again because she had a lot of lates. And a lot of times, in order to get an approval, they want to make sure the automated underwriting system likes to see that you have not been late in the last 12 months. So that's the reason why I said it was going to take about a year. She was well aware of this. We communicated throughout the year's time. She did exactly what I told her to do. She followed a plan on how to get her credit up to date, where it needed to be, because credit scores are developed by an algorithm that credit bureaus use. It depends on your high credit balance, on what the credit card allows you to go up to, versus the balance that you actually owe on your card. So we got all those ratios in line. She had to pay down some cards to a certain point. But in all, at the end, when it was time to pull credit on her, her credit scores raised enough where I could help her. And I got her into her own home that she can afford on her own with her children. So it's been great. Like I said, I've gotten her two kids, and actually, her nephew reached out several weeks ago because he wants to purchase. So it's success stories like that that keep you loving your job, because there are many times that it, I love getting someone in their home, just like I'm sure you love actually, wow, we found a house that this person can call a home. It's where they're going to make memories. So it is a special time. It's a great story. And it's great when someone can listen to what you tell them and they follow that plan.
Yes. The
It
operative
really,
word. Listen. Like Beyonce
right?
said. That's truly inspiring, Lisa. Success stories like these, they highlight the positive impact loan advisors can have on individuals, and the family seeking to achieve their home ownership dreams. So kudos to you in making that come true for so many people. That was an awesome story.
Thank you.
And just being honest, me, yes. I went through that thing where I was getting credit cards left and right, and just when I was younger, and kind of just wilded out and just messed up my credit really. So, but you can always come back. Everyone can come back from it, bounce back. So there's no need to feel shame. The majority of the world has done it, especially when you're not taught about credit. And there are a lot of communities out there that don't know about credit and how to use it and make it be an advantage for you. And a special loan officer like Lisa can direct you, and your credit score shoot up as well as owning your home. So kudos. Step.
That's a good point. They should really teach credit in schools.
Yeah, I
I
agree
mean,
with you
it would do.
1000%.
Yes, it really would. That's one thing that they're missing. They really need to do that.
Yeah. Yeah, they really should do that, Lisa. I couldn't agree with you more. I think that is really it should be a taught curriculum in the schools. It really should. And if it is, it would change a lot of things in the world. But people have to
Yeah.
take it on themselves too.
Yes.
And
And
it,
not to, and just because in that situation
mhm.
where that client took a year, again, I just want everybody to understand that it only took a year because we needed to show that she had no lates for 12 months. Basically, we were proving that she could make payments on time. That's basically what we needed to do. But I mean, I see credit all the time, and not everybody's credit is perfect. I see a lot of less perfect credit than perfect.
Yeah,
And some people need to raise their credit scores, and some people are flying by with maybe a 600 or a 610 score, and some people want to be able to raise it. And there are ways to raise your credit score. And I'm not going to say 100% of the time, but a good 98% of the time, if the person follows the schedule that I put them on, or we do what we call a rapid rescore, and you can have a credit change in 7 to 14 days. We can see your credit go
wow.
up dramatically. Yeah, pretty dramatically. Sometimes it's going to cost money, because a lot of times they want to see the credit card get down to a certain balance.
Yes.
They don't really ask ever to close out a card, because that's a big no-no in the industry. You really never want to close out a card because you're closing out your history. You might have had a card for
It's
20
so
years.
slow.
Don't go closing that out. So it's definitely
Exactly.
worked. Yeah.
Yeah, I did that when I was younger.
Oh,
Thinking
you
I
close.
was, yeah, I closed accounts and I was like, wow, I went through it without any knowledge of knowing anything about it. So
Yeah.
I learned now, and this computer wants to beep, but it's okay. We're here. We are here. I wanted to take you into this next round. You said the word rapid, so it brought to mind the rapid fire questions that we have.
Oh, okay.
It's time for the lightning round now. I'll throw some quick questions your way, and I want your immediate gut response, Lisa. You ready?
Okay. Yes.
All right. Fixed rate or adjustable rate mortgages?
Fixed rate.
Okay. Biggest misconception about mortgages?
You do not need to have a perfect credit score to get a loan.
Awesome. We just talked about
Just talked about that.
that. Now, the best piece of advice for first time home buyers.
Well, a house has expenses, and a lot of people think they just save money for their down payment or they have their monthly payment. A lot of times, a lender is going to want to see that they have reserves for a rainy day. But it's not just your mortgage payment. There are so many other things that come with a home. Uh, Number one, it's your homeowners association. You may already have homeowners dues that are owed monthly. Taking that into consideration, if you don't, you may pay for an exterminator or lawn service or maybe your own pool service. There are just so many other expenses that do come with a house that you just need to be aware of.
Yeah. And just the monthly maintenance on a home, making sure just before anything goes wrong, you want to just make sure an ounce of prevention is worth a pound of cure,
It's the
especially,
miscellaneous.
yes.
Yes. I think you and I had a conversation recently and my refrigerator went out. Well,
Yeah.
you have to get either a new fridge or it's got to get repaired. And I think you
One or
had
the other, right? Yeah.
one or the other. Yeah. So there's always expenses and you have to just be aware.
Yeah,
Just be aware and you have to have money for the rainy day and those miscellaneous.
exactly. Exactly. Now, I know that this discussion can go on and on and on and on because I love chatting with you, and I just wanted you to share with the people about,
Yeah.
are there, we talked about some of the trends with AI, but are there any other emerging trends or innovations that borrowers should keep an eye out on as far as the future of mortgages?
Well, I think they're constantly bringing about new loan programs.
Mhm.
I think that's something to be made aware of. It's the American dream is to get everybody into a home. So I will say they are constantly coming out with new programs, a lot of different down payment assistance programs. And what's good about the down payment assistance programs is there's more than one.
Mm.
So one may have a better interest rate, but they have income restrictions. Well, the other one may require you to be in a certain area in order to get their program.
Oh,
Another one may want your ratios. And when I say ratios, what I mean is your income that you're making coming in versus the bills that you're paying out. So when that ratio is figured, that program may want you to stick around a certain ratio. So at least you have different programs to fit that in particular person.
okay. You brought it up something interesting, Lisa. I wonder if you can just elaborate a little more on the debt to income ratio in the front end and the back end and what that entails a little bit for our viewers today.
Yes, absolutely. So when you get a loan, you have to usually for a conventional loan, they want to see your back end ratio at 45% or less. Sometimes if you have a lot of assets, you may get an approval at 46%, but basically what your ratio is, it's your income that you're making. I'll use an example. Say you're making $2,000 a month. Then we look at your bills that are coming off of your credit bureau plus the new mortgage payment. If that all equals $1,000, well, we know your ratio is at 50%. So
Hmm.
it's the income that you have coming in versus the debt that you have coming out. And again, it's the debt that is seen on your credit bureau. I would like to say this though, child support. Child support is something that you have to disclose to your loan advisor, whether you are the one getting money for child support. We want to use that income because that income can be included with your jobs and whatever you're making from your job.
Yeah,
If you're the one paying the child support, we need to know that that is a debt that we have to consider that. We
definitely.
definitely have to consider what you're paying. Yes.
Yeah, that is something that people may not even consider. So thanks for sharing that. I mean,
Thank
it's about
you.
all the things, yeah, that you mentioned. Um, if you have habits, shopping habits, it's gonna
Yeah.
dictate your debt to income ratio, what's coming out.
Yes.
And you can make $1 million, but if you're shelling out 2 million, it's it's not gonna
Exactly.
help you, right?
Exactly. Yes. Another example of somebody having debt that didn't show up on a credit report was a client. We ended up finding out later on when an underwriter pulled a report. They had another property, but the property was just land. So they felt no need to say anything because it was just a piece of land. They didn't own a house. There was no house on it. There was no structure. But what are you paying when you have land? You may not be paying homeowners insurance, but you do have property taxes.
Hmm.
So we needed to ask for the property tax bill, just so we can average that yearly amount, break it down into monthly, so we can add that into their debt to income ratio as well. It's those little things. That's why the conversation, when you're first working together, it's important to have that conversation.
Yes, yes, and it comes back to sharing, even sharing everything and
Yes,
listening. Operative word, ladies and gentlemen, out there in
yes,
the TNT real estate gold world, listen.
yes.
So
Another closing that that's going to be closing soon. uh, you try and instruct people. There are certain things that you don't want to do that are just no-nos when you're buying a house. Don't go out buying any major appliances because we pulled credit. Those appliances were not on your credit bureau to begin with. You go
yep,
out buying appliances now, you just incurred more debt. And now we have to look at that payment. And those payments can make or break you qualifying for that loan. It
yes,
really can. I had a client who went out right before we were ready to close and he bought a car. And
wow,
yes, a car, and it was a hefty payment. It didn't hurt the loan, thankfully. We were still
wow,
able to close the loan. Yes. Oh, gosh, right?
right, yeah,
Yes. And on this current loan I'm working on, she switched jobs.
oof,
She quit her job and got a new job. And that is a no no. You really don't want to do that. In this case, she's a teacher, and maybe there are some teachers watching this, but teachers get paid once a month. So in this case, in this particular loan that we are doing, it's an FHA loan,
hmm,
and FHA has a guideline for future employment. You can close 60 days before that first pay stub. So we were supposed to close in a week. We can't because that was going to bring us to 75 days before her first pay stub. So we had to get an extension. The phone call had to be made to the builder, the agent, the other
wow,
agent, the buyer, everybody involved. So we had to push it out. It's okay, and it worked, but you really don't want to make those job changes in the middle of the loan process. It's a no-no.
yeah. It
Um,
brings on a lot of extra
it does.
work.
It
Yeah,
does. No, but everybody's fine. Nobody is mad or anything. It's just, it is a guideline, and lenders do need to follow guidelines.
Exactly. That is awesome that you're able to still close those, especially buying a car. Man, that's
Yeah,
huge.
that
That
was
is,
scary. Yeah,
yeah,
that was scary.
yeah. We had a client one time. We got all the way to the closing table. I mean, the loan advisor we were working with, he just approved her. I don't know what his process was, but we couldn't close for whatever reason, and it's just some instances like that. But I've also had another instance where someone went and bought some stuff too after we told them not to, but they got in their mind that, well, I'm closing in 2 days, so I'm just going. And lo and
Yeah.
behold, they threw everything off, and I was like,
Oh,
wow,
wow.
yeah,
Yeah, luckily I haven't been to a closing table and not close. I haven't had that with a customer or anything. Knock on wood. I would hate for that ever to happen. But
right,
again, it's constantly reinforcing. Hey, I might have told you. Remember, don't go buying anything. You're close to closing. You got 10 more days. You
yeah,
know, don't go buying anything yet. So it's that
yeah,
constant reminder. It's the conversation. Need
yeah.
to have the conversation.
Well, these are some exciting times ahead for us in the mortgage world, in real estate world, as well as future homeowners world and sellers. And Lisa, I just got to say, your foresight provides our listeners with valuable perspectives as they navigate the evolving landscape of mortgages. I want to thank you so much for taking time out of your day and sharing your insight, your wisdom, your expertise. It's been awesome. Our time together has flown by. And Lisa, I just want to express my deepest appreciation for you sharing your expertise and insight with our audience today. Your knowledge has undoubtedly shed light on the intricacies of the mortgage world. Are there any final words that you'd like to say to our viewing audience?
No, just have fun. Happy house hunting. It should be a joyous, fun time for you. Find that house that you love. Start making new memories. It's a new chapter, and all good things. I'm throwing out all positive vibes. It can be a nice road to go down. It's a great journey. And good luck to everybody out there.
All right. In 2024, we're going to open up the doors. And we'd just like to thank our fantastic listeners. Thank you so much for joining us in this enlightening journey in the world of mortgages with Lisa. Now, if you found today's discussion valuable, don't forget to hit that subscribe button and share this episode with your friends and family who are looking for a home or looking to sell a home. And contact us on our social media to stay updated on the upcoming episodes and exclusive content. Remember, your dream home is within your reach, and understanding the mortgage landscape is a key step in achieving that. Thank you all so much for joining us. Good night, everybody.
Today's show is brought to you by our sponsor, KJ Multimedia Solutions. We extend our deepest gratitude. Your partnership is invaluable.